Hello, I'm Greg Bunnell. Welcome to Market Call. Kim Bolton's on the show today. He's president and portfolio manager at Black Swan Dexteritas. He wants to take your calls, your emails, and your tweets on technology stocks. So give us a call. It's toll free. 1-855-326-6266. You can send an email to marketcall@bnmbloomberg.ca, or you can catch up with us on Twitter. Good to see you again, Kim. Always great to have you here.
Thanks for having me back, Greg.
So these are the early innings of 2019. The TSX was on a nice little winning streak. We've broken it so far today. But you think that this year, 2019, will be a case of an epic battle, the Bears versus the Bulls, and ultimately someone's got to win that battle.
You know, Greg, I don't think it's that much different from 2018. You know, think back to 2018. You know, it ended at the end of the year, sort of minus, depending on the North American indices, -5, -10, -15. I think this year it's probably going to end up somewhere between up 10 and down 10. But in between, you're going to have fantastic opportunities because of the volatility.
So that seems like an opportunity for a trader and not necessarily a buy and forget it kind of investor.
Yeah, it's not like 2017. Remember, you could just sort of buy something and
you just
let
bought the
it run.
broader market and
Right.
sat back and didn't do any more thinking at the
Right.
end of the year. You're like, wow, I'm a genius.
Yeah. But if you think back about last year, last year we had 8 times where there was a correction between 5 and 10%. 8 times. And you had twice where it was a correction in excess of 10%. The last one in Q4 was 19.5% that it went down. So I don't think anything has changed. I'm not going to say we're in a bear market or whether we're in a bull market. I think we're in a market transition, and it's just going to be a lot of volatility and great opportunity.
I get the sense that some investors are thinking that the U.S. Federal Reserve, that Jay Powell has their back. Didn't seem like it for a while there, but then he got a lot softer and gentler in his communications with investors. Do you think that's a bit of false hope that the Fed cares all that much about our portfolios?
No, I really think the Federal Reserve achieved what they needed to achieve last year. If you think back to 2007, the beginning of the financial crisis, they had $1 trillion on their balance sheet. At the end of the financial crisis, it had grown up to $4 trillion. And they figured last year they were able to actually reduce it by about $1 trillion. So they achieved what they needed to do because they need to build up the war chest in case something else happens out there. And, they raised the rates, and they're just going to sort of calm down right now.
Eventually, something will happen. I mean, these things are cyclical. The economy is cyclical. The debt markets, everything, the equity markets. So, do you feel they're ready again? That the central banks, including ours and some of the other ones, actually have that dry powder?
Absolutely. Well, certainly the Federal Reserve, but even the ECB. The ECB has stopped printing the money. They haven't tightened. And we'll find out on Thursday, sort of the direction that they're going. But, in this environment, I think everyone could agree that there is a bit of a bearish backdrop out there because you've got tightening here in North America. You've got a slowdown around the world that is slowing down revenues on the micro side and earnings. The bond market isn't buying it. There's still that flight to quality. So I think right now you can say that there's a bit of a bearish backdrop. You could even say that the rally that has happened over the last sort of 3, 4, 5 weeks is a bit of a bear market rally, maybe. But I think what's happened so far this year and what happened last year is going to be indicative of what's going to happen this year. You're going to have market moves up, market moves down, and you can't get too bullish, you can't get too bearish. And you can never sell the highs and buy the lows, but you can bank some money in between. And that's what we're doing.
Fascinating stuff. We're going to be back with Kim Bolton. He's president and portfolio manager at Black Swan Dexteritas. He wants to answer your questions on technology stocks, so give us a call. It's toll free. 1-855-326-6266. Start things off with an email from Fred. He wants to talk about Square. What do you think the potential is here for this name?
We readjusted over the last sort of 4 to 5 months our portfolio, and we actually shortened the length of single stocks. We usually, if you go back a year ago, we sort of had between 30 and 40. Square is one of the ones that we've actually kept for that sort of fintech, e-commerce side of things. This Square, PayPal, Visa are the ones that we kept. Square, you know, it's not cheap. It's got a PEG ratio of 2.6, and here we are sitting at about 70. We have a price target of 80. So there's still a little bit on the table that we see in here. You know, a price target of 12 months hence. You
think a little more. Well, these kind of companies that provide these kind of mobile payment, they call them solutions, the jargon of the industry. But still, I had a discussion on Market Call last night about the idea of moats and companies that can create moats around what they do. These tech companies that provide these services, what is it about them that can keep other players at bay, or simply someone might just show up tomorrow with a better piece of software and then that's it?
Right. It really comes down to two things. Number one, you have to have the leading technology, but then you have to be able to scale it, to leverage it and build it out, and quickly, because other people are biting at their heels. And they've been able to purchase some other companies around the world, and they've been able to scale it from there.
We have Matthew on the line from Vancouver. What's your question, Matthew?
Hi, thanks for taking my call. Yeah, I wanted to ask about Amazon. It's a bigger company. They peaked at $17.50, and now they're down to $16.20. But I mean, do they do right by the investors? I'm pretty sure half of it's just criminals and cryptocurrency skirting royal taxes. I don't want the guy in business. I'd be the richest man in the world. But what do you think of Amazon as a buy, sell, or hold? Thank you.
All right, Amazon. What do you think about Amazon?
This is one of the stocks that we kept. So we actually have a portfolio of 15, 16 single stocks, and then we have the ETFs there for a little bit of flexibility, but also the diversification to be able to trade it. Amazon is one of the stocks that we've kept. We have a price target on 12-month price target of $21.50, so there's still quite a bit of upside. It's just a behemoth that has a very diverse number of business streams out there. And it has that moat that you talked about before. So this is, we have about a 3.5% single stock in this, but we also own it over in the FDN, the ETF over there. It actually, in the FDN, it accounts for about 8.5%, so there's about another 1.5% that we have. So we got a holding of about 5% in Amazon.
You believe in the name? Do you believe in the sort of global domination strategy as well? Amazon seems to be saying there's no business that we can't be in and be a major player in.
But they're still selective, and you know, they get. One of the reasons that they have a moat, for example, in the cloud space or even in the e-commerce space, is that they started that business 10 years ago, and their moat is really a reason of investing into something that no one actually heard or saw of, and then they keep reinvesting. And so their moat is that they actually have a bit of a lead. It's sort of like Tesla. We don't own Tesla, but the reason Tesla can compete with the big motor companies around the world is they got the head start.
Amazon, the street likes it. 48 buys, 2 holds, and 1 sell on the name. We have Jen on the line in Toronto. What's your question, Jen?
What about Salesforce? Should I buy or wait? Thank you so much.
All right, Salesforce, CRM, I believe this ticker on that one.
This is, I've spoken about Salesforce before on here. This is the poster child of the software as a service. And again, they have, you know, you look at the other technology companies, look at Microsoft. Microsoft took their lead from Salesforce to actually get into the subscription business. And they were the ones that actually created the subscription, which is what everyone talks about when it comes to reoccurring. Because when you get into a subscription service, then you get paid every month, rather than getting paid once a year. And so it sort of smooths out the revenue stream over the course. And there again, they have the lead in that, and they've got the moat. In the Salesforce, we have, it's not cheap. It's got a PEG ratio of 1.68, and we got a price target of 173, trading just over 150. So it's got about another 15% on here.
When you see PEG ratios, price to earnings growth like that for these tech names, it seems sort of part and parcel. It seems that when you buy these names, you're sort of buying the hope of what they're going to become in the future. There's already a solid business there, but you think it's going to get even better.
That it's going to get better.
Get better, or at least make us some money.
Or at least maintain their growth rates. You know, when we went into the end of Q4, everything got beaten up so badly. And everyone sort of lowered their growth expectations. But then, I guess everyone does their homework over the holidays, and then they come back and they say, you know what? Salesforce has beaten expectations. What is it? It's like 13 or 14 quarters in a row. So everyone came back in gangbusters to actually buy into this, because all they have to do is maintain their growth rate on the top and the bottom line. But if you go back over history, they've exceeded it every time, every quarter. Yeah.
41 buys, 3 holds, and 0 sells, and that next earnings report coming out on February 27th from Salesforce. We'll be right back with Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas, who wants to answer your questions on technology stocks. So give us a call. It's toll free, 1-855-326-6266. We have an email from Aaliyah in Oakville, Ontario. I want to talk about Universal Display. Would this be a buying opportunity for the name, Universal Display? I'm not familiar with them. OLED.
Universal Display. We've owned this for, and we've traded it actually for the last, a couple of years, maybe 2.5 years. And it's really ranged, if you look over the last 2.5 years, it's probably ranged anywhere from the high 70s to 170.
Wow.
So what they do, it's interesting. iPhone here. What Universal Display has is that they have the patent for the display screen in smartphones. So in the past, the display screens had layers. And originally, if you go back to the original smartphones, they had about a dozen to 15 layers. And then Universal Display came up and they patented, and now they get the royalties for these oxide display screens. And basically what it does is it takes those 16 layers down to 4 layers. And then that's important because then if it's taking up less space, you can put other sort of hardware, chips, other things, camera stuff, a radio frequency, more high-powered within that. And so now you have Apple, Huawei, Xiaomi, Samsung. They've all said by 2020, they're going to be going to the OLED screens. And every time they sell a phone, Universal Display gets a royalty.
Not bad business to be.
It's you know, the reason for the volatility over the last couple of years is it's taken time for the manufacturers of the smartphones to actually incorporate it into their manufacturing process. So it's had some sort of ups and downs. But Greg, a year from now, it's going to be all the talk around. And so if you can buy it, I think it's trading right now just sort of around
94.5 bucks.
Yeah. If you can buy it in the high 80s, I think it's a bargain. And right now for this year, we have a price target of 150, 12 months out. But I think this year you sort of buy it in the high 80s, you sell it sort of in the 120, maybe high teens, 118, something like that. So it's for us, it's a core holding.
Fascinating name, and I learned something. We got Tony in Kimberley, BC. What's your question, Tony?
Hi, I was wondering about hearing about AI technology, and I'm not quite sure what is all about AI technology, but I was wondering what kind of stocks there are on AI technology, and what would be a stock that would be good to get in in the bottom. Thank you.
Artificial intelligence, where's the opportunity? Is there an opportunity, and then what stocks do you play?
You know, the artificial intelligence opportunity, I think, is we're more looking in years. Right now, it's more about machine learning. It's about algos. It's about learning patterns. However, the more and the faster and the smarter the chips are, then it gets into, rather than looking for patterns, the chips will find the patterns before we actually see them. So that's what artificial intelligence is all about. Yes, we have participation in there. It's very difficult because even the big names out there that are putting through all the patents of the Amazons and the Facebooks and the Apples and the Googles, they're gathering the smart scientists around the world, and then they're filing the patents on artificial intelligence. So it's difficult to find a pure play. What we have done is that in a space like this, it has volatility, and you want to try to lessen the volatility, so we actually rely on an ETF. And the ETF, the symbol on that is BOTZ.
Yeah, bots.
Bots.
There you go.
Yeah. But it's actually both a robotics and an artificial intelligence ETF. It's very broad. It has it's pretty big. You know, the ETF has a market cap of $1.3 billion, and you can actually trade this. And so this is what we've actually been doing on this. We put sort of we use the 50-day moving average. We put 5% bands around that. We only have a 5% position in bots. But you can actually trade around within this, and this is the environment to actually do it. And as we were talking originally, that we don't want to get too bullish, we don't want to get too bearish. We want to see the volatility and be able to trade securities and instruments like this.
Stay nimble. We got an email from Michelle out of Edmonton. Wants to talk about PayPal. What's your take on the name?
Michelle, thank you very much for calling in. You seem to be picking up all the ones that we actually own. PayPal actually falls into that fintech side, and they picked up a company called Vimo about a couple of years ago. They've been able to extend their lead within the fintech side. They're actually getting into the emerging markets. So PayPal is actually one of our selections. Again, it's not that cheap, but we got a price target here, and it's not that far. It's only about 7% away. We have a price target on that of $97.85.
All right. We have Ross on the line from Vancouver. What's your question, Ross?
Yes, good morning. Thanks for taking my call, Greg. Great show. And my question for Kim is, I'm looking for a way to play the gaming market with the pick and axe pick, and I was looking at NVIDIA, and I was wondering, I'm a long-term investor, and I was trying to figure out a way to play more of a pick and axe way to play it, as opposed to a pure play, even though they're cyclical. Your comments, please, and I'll hang up and listen.
What do you think of the chip makers, NVIDIA?
So we, on the chip makers, we play it, and I'll try to include NVIDIA in this. We play it two ways. On the chip makers side, we do have 3 of them, and one of them on a single stock. One of them is Infineon. Another one is Xilinx, and then the third one is Micron. We don't have NVIDIA in there. However, we do have NVIDIA in 2 places. It's actually in 2 ETFs, pretty sizable ones. One is the IGV. IGV is the software application ETF. It's a monster of an ETF, just over $2 billion. Then the other one it's actually included in is in the FDN, which is the internet software. And it's in the top 10 holdings of both of those. So we do like NVIDIA.
Carrie in Lloydminster, Alberta. What's your question, Carrie?
Good day. I am interested in your opinion on MongoDB. I've owned it for a while, and it's been doing really well, but it might be getting Amazon here. I see it. They also have a database thing going, so I'd just like your opinion. Thank you.
All right, MongoDB.
Yeah. Carrie, you've done your homework. We owned it, and then we sold it in Q4. We still follow it. We have a price target 12 months out at $60. It's currently trading at, do you have it on there?
80.
Yeah, it's at 80. So we're gonna actually look to buy it a lot lower than this. You know, it's been a darling out there because it's involved. MongoDB actually came out of a lot of people from Cisco, and they've been able to get on the bandwagon of actually bringing in software where in the past on networking you actually had to buy new hardware, and so their growth rates are phenomenal. This is why they've gone to gangbusters over the past couple of years. But up here at $80, I think it's very, very expensive, and that's why we sold it.
Stay tuned. Past picks coming up next. Time for Past Picks. We go back to June 1st, 2018. You like the Dassault Systems, but it hasn't been performing. What's happening with this name?
Well, thank goodness we sold it. So Dassault, there were two companies in this space, Dassault and PTC. And what space they play in is in digital twins. And I think we've sort of talked about this before, but it's basically taking avatars of real-time objects or environments and putting them on the screen. And they became leaders in this. You can imagine if you're working in a factory and you want to make your processing more efficient and effective, and everything, all your machines are packed full of sensors. If you can actually put it on your screen, and then hypothetically you can change different processes, and you can make it more efficient, more effective, and actually create more profits. So Dassault is a great example of this. However, it was also recognized by other people, and we took some profit right at the beginning of Q4.
Infineon Technologies. What do they do, and why are they not performing better?
We still hold on to Infineon. You know, Infineon is a German-Dutch joint venture that is involved in the semiconductor industry, particularly servicing the autonomous driving ecosystem. And as we know, the automotive sector has slowed down, and it sort of brought Infineon. However, as we talked before, you try to find those companies that have moats and leads, and Infineon is a leader within that. So we actually lightened up on a lot of our semiconductors. The two that we kept was Infineon and also Xilinx.
Tencent Holdings. Was this the way that people were playing the Fortnite craze? Did they have something to do with Fortnite?
Yeah.
I remember that.
Tencent,
I know my kids had something to do with Fortnite, to the detriment of their grades. Tencent.
Tencent owns like 35% of Fortnite.
And 100% of my 15-year-olds.
And it's come back as some of the Chinese internet stocks have come back, certainly since the middle of December there. What happened is that if you go back to, it was sort of late August, the Chinese government actually put a curfew on companies like Tencent bringing out new games because they had a massive problem over there that the younger generation, it wasn't just your kids, but it was a lot of the Chinese younger generation were absolutely fixated on games. They actually set up reform schools all over the country where people could send their kids to get them off the fix of gaming. So anyway, they had this moratorium on gaming, and then they lifted they actually went through, did an audit of all the gaming. They got rid of the ones that were too violent and suggestive or whatever. And then it was the beginning of December that the Chinese government opened up the floodgates. And of course, the biggest one in the gaming industry is in Tencent. But Tencent has so many business angles over there.
Well, that's fascinating. I didn't know about the gaming problem over there. What I've done, and because I gave the kid the benefit of the doubt before, Sunday nights I take the PS4, I unplug it, I take it away, I hide it somewhere in the house. He gets it back Friday after school. So during the week, hopefully, he's not getting his fix somewhere else, but he probably is.
Well, the joke...
They're sneaky, these teenagers.
The joke over in China was that as a kid, if your parents ever said, we're going to go visit Uncle Charlie, that meant that was the code word that they're going to take you to the reform school.
That's it. No video games for you. We're going to be back with Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. Answer your questions on technology stocks. To give us a call, 1-855-326-6266. Got an email from Stefan. He wants to talk about Qualcomm. What's your opinion about this one, Qualcomm?
Thanks, Stefan. Qualcomm. When we changed our tactics, not the strategy, just the tactics of our portfolio, where we wanted to be more nimble so that we could actually trade the volatility of these various stocks, one of the stocks that we sold was Qualcomm. You know, it's in that semiconductor side, but we still own Qualcomm within the ETF, the SOXX. And it's one of the top 3 holdings. So within, you know, we have a 10% positions in the SOXX, and Qualcomm is about 5%. So we got about 1.5% position coming out of Qualcomm, versus what we had before, which was about a 3.5%. I guess the reason we've sort of scaled it down is that there's a lot of anti-competitive issues that's going on with Qualcomm, and certainly within the legal issues with Apple. And so we want to own it because they're a leader, but we just decided to scale it back, and one way to scale it back was to use the flexibility of that SOXX.
You just mentioned the difference between your strategy and your tactics for carrying out that strategy. I believe you bought a pie chart along too that sort of illustrates how you go about things. Yeah, if we could take a look at it, maybe walk us through it.
Sure.
I just sprung it on the control room. So
okay.
We'll give them a second.
Okay.
There it is.
So, if you know, we've been managing this portfolio now. We're in our 6th year, and you know, going all the way back to 2012. You know, from 2012 to 2018, there was volatility in there, but it was still a secular bull market. You certainly had a guide out there, and you knew that you were in a secular bull market. Then 2018 happens, and then you have 8 corrections between 5 and 10%, 2 in excess of 10%, and then things change. Now you're into a trading environment. You can never buy the lows and sell the tops, but our hurdle rate is 8%. And so what we decided to do is that in the past, we've held sort of between 30 and 40 single stock names, long, short. And we scaled that down by about a half, where it's down to about 15. And it accounts for 50% of the portfolio. The other 50% of the portfolio, we used ETFs. And we still get the diversification, even more diversification, but then we can actually trade those ETFs. So for example, the beginning of the year, we were fully invested in the ETFs and fully invested in the single stocks. Last week, we actually took a third of our position on the SOXX. For technical reasons, we took profit. We just banked it. We banked that IGV that I talked about, which is the software application ETF. We banked it twice last week, and we took 2/3 of the position off. And then on the FDN, which is the Internet Software ETF, we took a third off there. So we're actually down to 80% fully invested, 20% cash. And then as the market comes back down, it just got overbought a little bit. As it sells off, we'll just buy those positions, the SOXX and the IGV and the FDN, back. So I go back, the reason that we had this change in tactics, the strategy hasn't changed. We're still very bullish on software application, internet software, semiconductors, fintech, e-commerce. Those themes, the OLED theme, they're still very, very strong. But the tactics on actually how we participate change so that it actually gives us that flexibility and the agility to actually bank some profits when you have this volatility in the market. I hope that made sense.
Makes sense to me. I think we have Carl in Surrey, BC on the line. What's your question, Carl?
Oh, hi. I just wanted his thoughts on Splunk, and actually I want to know the 12-month target, and I want him to explain about what he meant by 12-month target. Does it mean that you have to sell the stock and move on with another name?
Okay, so Splunk and the 12-month targets. How do you view 12-month targets?
I have 3 analysts. I have one in Toronto, I have one in Israel, and another one over in Silicon Valley. They do a lot of the sort of grunt work around this. Right now, Splunk is trading just shy of $120. We have a 12-month, from this point, 12-month target of $130.65. So there's a little bit of upside, and it's only like about maybe 6 or 7%. Once we get within that 5%, and this is why we use the 12-month target, once we get within 5%, we start to look to actually scale some off. Maybe an eighth, maybe a quarter. Once you get to price target before the 12 months from here, if it were to rise up to $131, we'd take off probably a third to a half. And then as it goes above that, we'll take a little bit more off again.
So make sure that you make your money and stay disciplined on that.
You can never get poor taking profit.
Or taking profits. Sorry, that was for Carl. And Surrey, we have an email from Marcus in Moncton. New Brunswick wants to talk about Siemens. Would you hold on to it with the potential for an economic slowdown? Siemens.
This is one of the names that we actually sold out in Q4 as we're changing those tactics within the portfolio. Siemens really sort of took over as the poster child as an industrial technology company. They actually have a digital business unit within Siemens, and we really love the fact that they were a really legitimate technology end user. However, they got caught up in the whole slowdown that was happening over in Europe, and we didn't see any end in sight there, so our decision to actually sell it was more of a macro decision rather than a micro. Now, We actually have a price target, and we still follow it. We still do it. But we got a price target of 150 euros.
150 right now. It's at 99 euros, 99 and change.
Yeah.
We can't show the audience the graph, so my apologies on Siemens, but right now it is at 99 and change.
Yeah. Yeah. So
That's your target.
yeah. So it's got a 50% lift, but the macro side over in Europe is a concern for us.
Okay, 17 buys, 12 holds, and 0 sells on Siemens. And the analysts have a 12-month target price of 121 bucks and change. We're going to be back with Kim Bolton, President and Portfolio Manager of Black Swan Dexteritas. He wants to answer your questions on technology stocks, so give us a call. Toll free, 1-855-326-6266. We have Jerry on the line from Whistler, BC. What's your question, Jerry?
I was going to ask about Micron Technologies. I noticed that it's not on the pie chart, but your guest was saying that it is in their portfolio. It's down quite a bit. I've just started acquiring the stock, and just interested in finding out what his opinion is. Thank you.
Jerry's either got great eyes or a giant TV to notice that Micron wasn't on that chart.
We could only fit so many logos on there. But yes, we own Micron, Xilinx, Infineon. Micron because they're a leader in the digital side. Infineon because they're a leader on the analog side, and then Xilinx for the field programmable chips. But we also own all of those in the SOXX. So we only have like 1.5% positions. We got a target price on Micron 12 months out of $77, and here we are at $34. It is extremely discounted here, and that's why we're holding on it. And it is a leader when it comes to the digital side.
Okay, that's Micron. We got Bill in Barrie, Ontario. What's your question, Bill?
Yes, could I have your guest's opinion on Shopify, please?
Shopify, all right. Here's one of those high flyers that got a little choppy last year.
Mm-hmm. We don't own it right now, but I did want to I did want to talk about it. This social media / e-commerce advertising side is still very, very strong. We're not participating in it because we really believe that there's some regulatory headwinds coming in here. And so we actually trade the Shopify, when it gets down to sort of that under 175, it comes up on our radar. Up here, we believe it to be a little expensive. We'd like following this side. We have an investment committee of investors, but then also serial tech entrepreneurs. They give us great insight into where they see the opportunities in the marketplace as serial tech entrepreneurs. And we have a number of e-commerce people that are on our investment committee. And Shopify is really the one that really only competes with Facebook. It keeps coming up, and they sort of go back and forth. Once in a while, Twitter will come up on their radar, but Shopify has a fantastic following, and so that's why we continue to follow.
We've got an email from Herb, Nutanix. Could I get your opinion on this one? NTNX on the NASDAQ.
Thanks, Herb. We actually sold Nutanix, and we took some profit on it. We sold it too early, actually. Earlier this year, we sold it. We owned it about just over 41 bucks. We sold it just over 48, and here we sold it at 48.43, and here it is at 50.80. So Nutanix has a great story. In again, they're one of the places that they service really two areas. One is into the data centers, and then the other one is into sort of the autonomous vehicle section. The autonomous vehicle section has actually been a bit of an issue, very much like what we were talking about with Infineon. But the data center side, what they've done is that they, if you were in a data center and you needed to upgrade your systems, you always had to go out and buy new hardware. Nutanix came up with a software that would actually upgrade your hardware in data centers, and they became very much a leader. We like it. We would look at it again if we could get it back down into the low 40s. But up here, we just see it a bit expensive.
And an email from Chris in Toronto wants to talk about Autodesk. What do you think about their latest acquisitions, PlanGrid and Building Connected?
Yeah.
Hope you know what all that means. I know what the word acquisition means.
Okay. This again falls into that side of the digital twins, and we always owned. This was for the CAD, you know, the graphics on screens and so on. And Autodesk was a leader. But then, yes, they did a couple of acquisitions, and they were able to actually catch up and actually compete with Dassault Systems and PTC. So we actually have it. There we are. We don't own it right now. It is part of the IGV. It's only a small part. It's about 2.5% within that ETF, the software application side, as is PTC and Dassault. But on our charts here, we have a one-year target of 150.
140.
And we don't own it right now, but we have an entry point down in the low 130s.
We'll be back after a short break. The top picks are coming up next. All right, it's time for the top picks. The first one on the list, you might be familiar with this company, Microsoft. What do you like about Microsoft? They've had a great run. Satya Nadella has definitely changed things up there. You think there's more to come?
You know, it's pretty amazing. You think, here we are at the beginning of 2019. Satya just took over the reins there in the middle of 2014. It hasn't been that long, and it's amazing the impact that he's had. You know, he just changed the whole business model from hardware to software as a service. He got on the bandwagon of Beinhoff over at Salesforce of how to do these subscriptions, and you get the monthly recurring. And then he recognized the opportunity of what Amazon was doing in the cloud, and now they're second place in the cloud business. So he's done all of the right things, and he has a very, very strong team behind them. And then on top of it, his business execution has been superb. And even though they've actually brought on quite a bit of debt, they still have their AAA rating. And they still buy back their stocks. And look at last year, even after last year. Microsoft, it was our number 3 or 4 holding within the portfolio. It was up 19% last year.
You can't throw any shade on that.
Yeah, yeah.
Xilinx, what do you like about Xilinx?
So this is one of those three semiconductor that we kept. Remember we talked about Micron, which is digital. You got Infineon, the Dutch-German one, which was the analog, and then Xilinx is the winner. You know, Xilinx, again, last year in 2018, XLNX was up 26% versus the SOXX, which is the ETF for the semiconductors, was down 8%. And the reason that they excel is that they are the leader within that field programmable chip. It's just basically chips that allow you to actually adjust and sort of adjust the software and the connections that are going, and they have a leadership in that. And they're big into the automotive, they're big into the data center. Oh, but the other thing that they're actually really on the bandwagon with, and a lot of the telecoms are using, is for the 5G networks that are coming out. And they seem to be the darling when it comes to, because of the field programmable and the ability, you can actually program the chips on site. So they're a darling in the 5G deployment.
1 minute left on the clock, one name to go through. Yaskawa Electric. What do you like about them?
So, remember I talked about that robotics, the robotics and the AI ETF. We only have about 5% in there. But one of the robotics that we kept was Yaskawa. And we had two of them before. We had Fanuc and we had Yaskawa. This is a very, very cyclical business. They are very sort of skewed to the automotive. They're very skewed to Japan. They're a Japanese company and also skewed to China. However, they do have a leadership in the motor and the drive technology side. And they've been beaten up over the last year. And if you look at the cyclicalities of these robotic companies, we believe you're just coming out of it.
That's the opportunity. All right, Kim, great to have you here as always. Look forward to the next time.
Thanks a lot.
That's it for this edition of Mark a Call. Of course, the show repeats all over the place. I got to say goodbye, but stay tuned. Watch more BNN Bloomberg.